Hi everyone, Stu here. Hope you're well. It's let's see if that's going to go live. No, doesn't seem to. Right. Sorry, I was just trying to see if my our Instagram post is working. It doesn't seem to be at the moment. Never mind. I thought it was something I was doing wrong last time. It's obviously not. So anyway, we are here on our X channel and our YouTube channel. We're live. Also, you can contact me direct to our Restream channel here if you've got the link. I did share it earlier with our users earlier. Big news overnight was the announcement from some federal judges that President Trump has exceeded some of his authority with regard to Trump tariffs. And that gave a right old spike to stock markets this morning, or earlier initially, but that's faded quite significantly. Not well, almost half the rally has gone. Let me just change that's gold. I'm going to come back to gold in a minute, obviously. If we look at if we look at, let's use the Dow as an example. So here, sorry, it's 30 minutes. Let's go up to the hourly chart from yesterday. So the news is breaking late last night. Strong rally here into the early hours, and it held it most of the Asian session. The European session has sold that off. We've given back probably about half our gains here. If we just put a little fib on where the low, where we were to where we are, there you go. We're about into that first fib level, the 38.2, and then you can see the 50 level is just about there. So we've given back nearly half of the gains. So 21,560 will be the next downside target. As you can see on this hourly chart, from a strong rally to the upside, that would have triggered short in this current hour or the previous hour here on the Nasdaq. So market still bid, tariffs being taken off, but a lot of them are still on. Sorry, not a lot of them are still on. Some of them are still. Excuse me, I'm still finishing my lunch, so excuse me for eating. So lots of euphoria around that with regard to stock markets, and dollars come up a tad as well. So Nasdaq is up. I'll come to our trades in a minute because we were long all the stock markets the day before, so we've bagged some nice profits. The S&P 500 went through its first target quite quickly. From the 20th, that one the other night on the 27th, we got some points in the bag there. Same with the Dow. In fact, I can't remember where I put this. I think this might have been our zone on the Dow and the Nasdaq. Our zone was. Is this the zone? I thought I'd typed it in the name of it, but anyway. The DAX also. We're talking about indexes. We got long here as well on the end of 27. That's gone against us ever since. So I'm maybe closing it out shortly. Stop loss is all the way down there, but we've moved down quite significantly today on the Dow as well. But as I say, fading that move, and so we on an intraday basis, this worked out really nicely. We've had this bid up. I say we've gone short here at this morning on the Dow, and we're nicely in the money on that intraday position. Remember, I like to trade the Dow and the DAX on an intraday position, so that's moving to the downside. Main reason we're here today. Hello, Indonesia. Hope you're well. Dribar, good afternoon to you, guys. If there's anything, I'm saying guys, ladies, however you want to present yourself. If there's a particular asset you want to trade, a particular thing you're interested in, particular time frame, particular setup, let me know. I'm happy to. We can talk about it together. We can show it together here. But thanks for being here. I hope you're all keeping well. It's Thursday here in here in London. All around the world, it's Thursday, isn't it? Most parts of the world still. It's lunchtime here, and I've had an early lunch, and I should have waited a bit more. But anyway, so markets, I say, stock markets. Let's just take this back up to the daily time frame. Reacted positively to that news yesterday about the tariffs. Tariffs obviously hanging on a way, and this recent high. That's obviously where that line was on the hourly chart. That's my upside target from this entry on the 27th. So we're still in there. Stop loss down here, just below the 20-day moving average. We'll see how that pans out. But remember, it's Thursday, and then Friday is the end of the month as well. So I'll be tidying these up probably before the end of the month anyway. So we mightn't let these run as long as possible. But this has had a really good run up from May. This April low here, where we went all the way down here at the beginning of April, has all been bought back. Stonking numbers from Nvidia last night while we're looking at charts. Treat me well, my friend. I'm very well. I hope you're well as well. And your trading's going well. As I say, anything you want to trade, let me have a look at. Or want me to have a look at, let me know. So we, Nvidia, the whole worry about China issues, the lockout, the new chips they're going to have to make. All of that was gobbled up by just general genetic organic growth from Nvidia. So they remain the darling of the AI boom, and there's lots more legs in that to come as well. So Nvidia, I think they're about 8% pre-market in the US this morning. Very, very good results from there. And Jason Wang, as ever, very, very bullish this morning on that as well. So stocks looking quite rosy, but as I say, the initial euphoria from the termination of many of the higher rate tariffs has been cooled quite significantly. You see here, there's been a turn down in all of this. The 4-hour chart, 4-hour candle on the Dow in the European session. That's obviously that Trump isn't going to take that lying down. Some of the tariffs are still in place. And the steel and auto tariffs with Mexico and Canada, they're still in place. But these eye-watering numbers are going to have to come down. And he said as much yesterday in his press conference when he was called and called to account. He didn't like the question about taco trade. Trump is always Jenkins out. He got quite upset about that. His thin skin twitched a bit on that. The taco trade, which some of the Wall Street traders have started to coin. But anyway, stocks are up, and then the faded that move so far today. The reason we're here today, we're looking at in about 5 minutes' time, we've got weekly claims, 229,000, a little tick higher from last week's 227,000. We've got the GDP numbers. Obviously, it's backward looking, but it's it's the final reading of those. The preliminary reading of those. You see by this P here on the indicator. So quite often, or has been in the past, quite an indicator. Interesting what these the core PCE price is going to be like as well in 5. So quite a significant data dump coming in the next 5 minutes. So let's see what happens with regard to the market. So say the stock markets have been rallied significantly, but they're down pre-market. Dollar has firmed this morning. Let's look at the majors. There we are. Look at the euro. I'll start with the euro. 129.94 at the moment. So I say dollar is improved. Sorry, it's 40. Dollar had improved this morning. That was a breaking of the news from the judges about the tariffs. So euro weakened all the way down to 112.10 zone, but it's since recovered all of that gain. So a bit like the stock markets are giving back, the euros moved back up and the dollar's weakened again. Dollar yen was looking quite relatively positive this morning, went to 146, but we're now back under 145, so 120 pip turnaround there on the dollar yen. So we've had a few days of running higher. That went short this morning here on this strategy here, added to it there, and this looks like a strong down candle as well. Across, you can see the MACD crossing there, the RSI moving down quite nicely on that setup there. So that was first indicator there, the cross of the MACD, and then we didn't actually breach the 20-hour moving average until 10 o'clock later on this morning. Trebor, Manuel, good day. Have a great day wherever you are, my friend. I hope you are trading well. Let's say if there's anything we can help you with, let me know. Jake, good afternoon, or good evening to you, I should say. So dollar giving back some of its gains. So let's have a quick look at the weekly claims. So I've got this is the chart from Forex Factory. You can see basically, it has been trending higher, hasn't it? So 2025, the weeks started, the weeks here, beginning of January, we're down here at around about the 200,000 level here, the second week of January. But we have started to trend higher. But also, you can also see the brown is the forecast number. So we've come in under forecast for most of the year so far. We've got 3 or 4 outlying weeks where we went to 240,000, and that was all around sort of weather-related claims. So although it started to tick up, and it is now starting to, it's averaging over the 225,000 for the last 4 weeks, it's still very healthy. It's still a relatively strong jobs market. So we'll see what that looks like in a minute. When that comes through, and see how the dollar reacts to that. And obviously the GDP on a monthly basis, quarterly basis, was looking at minus 3.5. We go back to our calendar here and see a bit more detail here. So negative growth for the first quarter, 0.3 of 1% from 0.24. Obviously, lots of companies front loaded, running things into the end of 2024. See what the prices are looking like as well, and see what these this PCE number looks like as well in a minute or two. So if I just go back to this, let's just get rid of that. We'll see the whole data here, this preliminary price data, and it's going to come through in the next couple of seconds or so. So as we left dollar yen, we were at 144.80, euros at 112.95, and sterling 134.75, not being able to hold the 135 break we had again over the last couple of days, and we're down, and it's continuing to move lower yesterday, but it's ticked back up again this morning. Another one that's moved higher this morning, when that would have ticked long there on that 8 o'clock opening bell there. MACD signal line crossing there, positive histogram. Not a great move from there, but anyway, let's just drill this down to the 5-minute time frame. Actually, choose the euro. We're looking at a 5-minute time frame, and euro up again on the data. So let's have a look what the data's are looking like. So 240,000. That's got another big stick. But as we saw just a couple of minutes ago, or a minute or so ago, when we were looking at our chart, that's a top level, isn't it? So it's another outlier of a week potentially. Who knows? It might be the start of this move up, but again, it is showing some signs of weakness in the that's not obviously but that's last week. I don't think it's obviously not updated that. If I update that, it may bring that in now. No, it's still last week. So 227, that's obviously from last week. Sorry, but you can see we're back here at 240,000. So this outlier, which we've ran to a few times, October, December, March, and again at the beginning of May. So second week of the final week away, also topping out, which is quite interesting as well, isn't it? So again, this trend to the upside, you see how we're getting higher. So there's certainly some signs of weakening or cooling of the US jobs market. But if we zoom out a bit further, you can see, it's still a very robust area. But if we go back to pre-pandemic, we're still a little bit above where we were at sort of pandemic, pre-pandemic times, under the 200,000 level. So so US market still leading the world when it comes to job creation and the resilience and the diversity of their economy. Let me just close that off in there. So last week was up, down from, revised just by 1,000. Doesn't really matter. That's significant, to be honest. Preliminary GDP not as bad as expected, so that's a positive tick. Jobs is tick the other side, and the price index is in line with expectations. Let's have a look at some of the data, or the detail of the data. Let me just update our calendar here. Thursday. I've brought all the other countries back in. I've sort of filled that out. Let's calendar drives me mad. But there we go. You work with what you've got in front of you. So let's have a look. Mr. Bailey got big key speech later on. Here we are. So core PCE cooling, interesting as well. That's quite a significant miss from expectation. It's not cooling; it's actually obviously gone up, but not as bad as many were expecting. First reading of that obviously might get taken, might get revised higher. GDP sales in line with expectations, higher than again last month. It's again not a particular surprise. The HUD 240, is it an outlier again like we've seen in previous weeks? Only time will tell once we move on. But as you can see here, as I was saying, the average 4 weekly average now is over the 225,000. In fact, we're over 230,000 to the upside. Prices 36, as we just said. And was the initial, the continuing claims 1.9 million again. So that's gone back over that psychological 1.9 million level as well. Continuing claims, those are the people who have been claiming unemployment job seeker allowance in the US for over 4 weeks. So I can't, there isn't actually there's not a continuing, I think that's on there, is it? On the Forex Factory website. Oh, I got that there. Where's the filter gone? Got to see. I don't think it's on there. Just bear with me a sec. Sorry. Apply filter. It doesn't show me the. I don't think it's got a graph for the continuing claims. So basically, as I say, it's over 1.9 million now. No, it's just got the weekly. I thought it did. Yeah. Okay. So anyway, let's see if that chart's updated. No, it hasn't. Yes, it has. There we are. So you can see that this week's number, it's back to this outdate. What was at previously, I was calling them outliers the last twice it's happened. That proved to be the case last time as well. But as you can see here at the beginning of the month, it came down, but we didn't go down as low as we did here during March and April. So we are seeing a definite trend to the upside of claims, unemployment claims, starting to move up and move away from that key 220,000 level where we have, you can legitimately say the US jobs market is very tight. It's still relatively tight. Those in work, earnings are still holding up. So those in work are getting paid quite well, relatively. But the sentiment data, the soft data around tariffs is sort of fallen off a cliff, but some of the hard data is still holding up. So let's see where it all pans out. But anyway, some relatively good data there out of the US. So let's just go back to the market. So euro continues to accrue to the upside. So there's our this is the 5-minute chart. So there's our data at 13.30. So positive to 113.13. So that's a positive. We've been sort of angling our high. We sort of moved lower just ahead of the data, but again, that's another one that had gone long here on this 5-minute strategy there, ahead of the data. If you're risky enough to take that, but that's bang on, the cross of the MACD and the signal line, and so you got in here at 112.88, and we're currently trading at 113.12. So there's 20 pips just simply in the last 20 minutes or so on the euro dollar. Last 20 minutes or so. You do that every day. You keep losing trades small. It's happy days, my friends. So dollar weakened on the data. Let's see if that's the same across the board. Sterling, similar move here. Again, there's 13.30 stop loss down there, the low of the day. And again, who said trading's complicated? It's not complicated. You've got to keep it simple. It's not easy, but it doesn't have to be complicated either. As I say, have a strategy, understand what it is, how it works, understand its pros and its cons. But very simple 5-minute time frame there for both cable, as you've just seen, and the euro, very much in the money. And I guess dollar yen doing the same thing. There we go. It was up, it was trending, but it was down all day, wasn't it? So we just wait for that one again to reverse back down, and again another one at 1 o'clock ahead of the data, and we've been short from there. New low of the day as well on that. That's a really nice one. Looked like it was rejecting it. We got lower again and just stayed on course. We haven't gone back to reverse back through the mid. Remember how we trade this strategy? We trail our stop loss down especially when we're trading on a short-term 5-minute market like this. Our stop loss now would be around about there where the mid moving averages. These are aligned, so we got them nicely in order. We've got a nice strong trend today. So you've either got in there and just left it on the higher time frames, or you're in and out here on these. If you're scalping this on the shorter time frame, we touched on this on Monday in Monday's webinar about adding to a trend. You can take multiple trades. It's not in and out. So initial trade would have been there. You'd have got out. Actually, you haven't got out anywhere until there. You would have got out there. Hasn't gone long. You'd have got back in here. Down we go. Got out there. So it'll be a flat trade. Got back in theirs. It's gone back down under the moving averages have crossed again. Nicely down. Out theirs. It's just about there. It's gone up 20s. Yes. So the trade. See how the waving down. Classic. A lower trend this morning all through the European session. Thanks very much. On the back of the fundamental news, the fading of the excitement about the judge's announcement that tariffs were illegal and he'd overstepped his mark. But it doesn't matter. Don't care about the news. We're just following it, and very much in the money. Last big entry would have been on that one. Something the size of the candle. The size of the candle would have added to it, and that's potentially another one on the news as well. Given that we've already moved quite a long way today from 145.80 to 144.50, that's 130 pips. This is where things like the ATR come into their own. If I just might pull up the ATR. So what is the ATR? The ATR measures the average distance this asset would travel in the particular time frame. In the 5-minute time frame, the dollar yen only moves 0.1 of one, a big number. Well, if we go to the daily time, remember we said we've moved 140 pips today. If we go to the ATR for the day, so the typical daily move is 1.6. So we've moved 1.2. So there's still, potential 40 pip move range to move, and this is pretty average, isn't it? At 1.6. We have been much higher than that. So there's no reason, is what that's suggesting. There's no reason to panic and get out of this just because it's at the low of the day and we've had a big candle. In fact, I would have added to that position on the news there to the downside here on the dollar yen, because that's the trend. That's what it's telling me. The MACD and the signal line didn't cross till there, so it was later than the moving averages for a change, which is a bit unusual. So we'd have got in, those traders would have got in there. So very good morning trend following dollar yen to the downside. So it doesn't happen all the time, but when it does, lots of money to be made when it's chopping around like this. Lots of failed trades, but you're not because you're not moving up and down. We've got flat moving averages. You're not losing many pips. You might have lost about 4 or 5 trades there, 3 or 4 trades certainly. A few of them losers, but you'd have had a winner there, and then a huge series of winners as we've moved down this morning on that particular position. Very simple setup. It works. It's effective. Apply it. And you can make money in this business, my friends. So dollars, let's just go back to the higher time frames then. So dollar has improved somewhat. So here, dollar yen moving up yesterday, and then we've given it up so far. We're giving a lot of it back, as we saw at the beginning of the session. So far today on the fading of the news. So Aussie 64.50. Bouncing through this 64.25 zone last in the Asian session, European session, and starting to move to the upside. Dollar CAD went back to 138. Dollar CAD back to 138 zone. So again, pressured dollar Again, the story is the same. Swissies remains had a massive move against the US dollar, and then we're down, not as low as we have been at the end of April, but we're still sub 83. We're at 82.50 for the Swiss franc. So dollar remains pressured. Let's just go back to the actually, let's go through these in order. So crypto is holding up quite well. We're at 108,000. We went to 112, 11,000 last week. And we're basically holding and rotating at highs, as we say. So where are we at the moment? We were down yesterday, and we're sort of bouncing a wee bit today. We're 108,400. So nothing to worry about there. That remains bid. We're consolidating at highs, which is always positive. There's that 111,000. That's a new all-time high we had last week. And happy days. We had that big conference in Las Vegas yesterday where the vice president was speaking more bullishness around crypto and US becoming, a major crypto player and the center of crypto for the world is how the administration are trying to plan things. So the biggest of the pack, the Bitcoin, has benefited significantly from that. The call it insider trading, but obviously there are certain personal assets that have done very, very well for the Trump family and also people around him as well. But that seems to have just fallen on deaf ears as far as the Americans are concerned at the moment. But anyway, who might say? So crypto remains bid. Oil is still pressured. Dollar, US oil at 61.75 this morning, sort of sliding sideways since the big rally from the $55 zone at the beginning of the month, and just lots of sideways action at the moment around $61, $62 on oil. US we the if you just go back to the is it on there? The private claims is on here yesterday, not claims, inventories. Well, this is just too long now. Wednesday. Where's the oil inventories gone? Here we are. Sorry, the oil inventories are a huge drawdown, 4.2 million. Massive surprise. Didn't actually have that a significant move in the oil market yesterday on that, although we'd finished above the $60 and 61.50 yesterday. Over 62. We're still just locked in the sideways. Actually, there's no trades around the oil market at the moment. With gold, though, we've been sort of weaving around and sort of weaving through the 3,300 level. So we're still holding at highs. We did go down, remember, to test this 3,200 level. But we had 2 down days, and then we've been up today. So on an hourly basis, we were long. 30-minute basis, we were long this morning. From the 8 o'clock candle, the 30-minute time frame. We took this one, didn't we? Yeah, it was this one here. Moving back up, and our stop loss was initially down here. We got stop loss there. Strong candle, nice big strong candle there. At 11 o'clock, we moved our stop loss up to entry, and we're continuing to move. Took some money off the table as we got to 3,000. And interestingly, we've broken through 3,000 quite significantly. We're now at nearly $15, $14 above the key 3,300 level. So that's a positive break for gold. So we could perhaps see the next level. Our next target would be here at 3,320 zone is our next target to the upside today for gold. So it's been a good day on the currency markets. It's been a good day in the shorter term, fading the rally in the index markets, and it's been a good day for our gold positions as well today. So if we just go back to our end of day positions that are currently still open, I haven't actually tidied all these up. We actually closed. We had a euro pound position that was finally closed for about, I think we lost 13 pips on it in the end. hang on a minute, let's go to the. We were short this, and then it went back to yesterday. It took us out, not much, but it doesn't matter, does it? How much it took us out, and we lost 13 pips on it yesterday. There we are. It wasn't yesterday afternoon. It was. I should have mentioned that, but that was a 13 pip loss because we pulled the stop loss down. There's our entry, and there's our stop loss we took out yesterday. But there you go. There's a great example of trading being the pain in the arse that it can be. We were stopped out at 1 o'clock, and then what happened? It turned around, and the hoo-ha around the judge's announcement took the euro pound to our target at 83.59, and we'd hit our target, but we'd been taken out before then. But that is trading, my friends, and there you go. Another good example of how the market fades back as well. So we had a 13-point loss on euro pound yesterday. The others we had running and are still open, but we had multiple positions. So pound yen, we pulled the stop loss down to here. So that, sorry, I pulled the stop loss up, I should say, for our first position. So the second half of our trade was closed yesterday at this stop loss here. We got in again here on the close of business here on the 27th, so it's a full pip, and then we got to our second target here yesterday. Also, I need to update the Discord. I haven't done that yet. Sorry, I'll show you that in a minute. So we got to our target there and then closed out that trade. Now it's retraced back to our entry as well. On that one, so that was pound yen. Swiss yen was similar. Sorry, pound Swiss was similar sort of price action. So it came back and took our second half of our trade. The stop loss, but we pulled it up again. We then got in here on the 28th, and it's reversed. And I think that's our stop. I can't remember what stop loss is here on the 27th one, but that was the entry. Didn't quite get to our target. To the upside, the pound Swiss. I don't think it. I'll have to check the system. It might have actually triggered the target a bit like the pound Swiss yen did, and then it's closed out as it's reversed back down. So again, successful second half of those trades and the full trade. So yesterday we were up, so like 60 odd pips, I think, yesterday. Again, I'll update all this data. I'll have to bring it from my other system. And what else? Euro, yen, there's the other one that hit target. That was 16 pips. I think that was the day before, wasn't it? Plus 16. When was that? I made a note of that. Let's have a look. Euro, yen. I can't remember when we were in that one. It's having too many. I trade in proper trading platform, and then trying to copy it across here to. Let's look for euro, yen. Euro. JPY, euro yen, entry target. Yeah, that's the one we fully closed, didn't we? I think. Yeah, because the stop loss is still all the way down there. So that's that was one. That was a one simple target. That's actually no, we must have only closed half it because it's clean same plus 16. Yeah, I need to update these. I didn't do that last night, but I will update. There was no new trades last night, but. That stop loss. Why is that there? That stop loss needs to come up to. Anyway, second half of that's obviously out of the money. If that's the case, it's back to T1. Might close that out completely now. In fact, take that for granted. The euro yen will be closed complete for another 16 pips on that one. We've had a good run, as I say. The other open trades we have at the moment, all the indexes, and they're all still open. I'm going to tidy those up. For the end of the month, DAX is out of the money quite significantly, so that we've had quite a bit. Looks like we've got a bit of a hit on that one. We got in at 24. I can't remember essentially what did we get in the DAX. DAX was in 24,285, and we are 24. Yeah, so 285 points out of the money there. See if we get some buying at this level here. See this is the resistance area. resistance area, support area, and we're into this support area. So see what happens here over the next couple of days. But that's consecutive 1, 2, 3, 4, 5, 6, 7, 8 hours to the downside for the DAX. I haven't got to new all-time highs just yesterday. So yeah, see if we get some buying there at the 24,000 level, but we're out the money on that one. The Dow is that's also slipped out the money. That completely faded it now from our entry. The Nasdaq that's still in the money, and the S&P 500 that's got to target one, so it's only half a position now. That's coming back to entry though. I might close that one out as well. Half a winner on that one. But so it's today, tomorrow to wrap up the May account. I might take some trades tonight, see what happens. But just watch the Discord channel for that. So in summary, my friends, we've got relatively good US data today. The claims have ticked up. That's one to watch going forward. GDP prices were better, not as negative, better than expected. Extending claims also, like the weekly claims, showing some signs of starting to move up to the upside. PCE tomorrow will be the big indicator for the Fed. Later tonight, we've got Andrew Bailey. I think he's talking on Bloomberg, I think it is, with quite a key interview as well. Lots of Fed speak as well this week, as we've seen with Williams and Kashkari in Tokyo earlier. We've got Goolsby later on in about an hour or so's time, just after the markets have opened today. Official inventories as well this afternoon. But tomorrow, as I say, we've got inflation out of Tokyo, key flip for the Japanese market, and retail sales from Germany, inflation data from other parts of Europe as well, Italy, Germany, and Spain. And the key data tomorrow is this PCE data. Remember, it's the Fed's preferred measure of rising costs or declining costs in the United States, personal consumer and expenditure, consumption and expenditure data, spending and income data as well. So they look at that with a fine tooth comb. Also Canadian GDP and the University of Michigan data as well. So quite a dump of data at the end of the month tomorrow as well. So plenty going on still as ever, but as ever, you've got to be in the market to make money. If you're not with us, why not? Come and join us. Our products are as good, if not better, than most prop trades. We've got one-step challenges, two-step challenges. We're very open. We're very transparent. We've currently got a offer on at the moment called Buy May 30, i.e. buy by May. So if you're going buy BYE MAY 30, that will get you a massive 30% discount off our already very aggressively priced challenges, my friends. So if you're looking to look at, say, get yourself a $50,000 account, you're going to get a massive 30% discount off that. It's going to come in at less than $250. If you haven't got $250, you've got $100. $25,000 worth of equity to play with, to trade with, to prove to us that you're a consistent, reliable trader. Get you to the funded account stage where you start to make some real money of your own for a very, very small investment of $122. And also remember, guys, when you get to the funded stage, you get the money back that you've invested anyway. So if you've proved it in the challenge phase, there's absolutely no reason why you can't do it with the funded account, and the profits you make there, 80% of them, starting from 80% of them, can be yours. Depending on the type of account you've got, it can be up to 90% if you go for the pro accounts. But say huge 30% discount available now. I don't know how long it's going to last for. Perhaps it does run out tomorrow. I haven't actually had a word from the bosses when they're going to run that out, but I'm guessing it's going to run out today and tomorrow. So get yourself with us, get another account open if you're already with us, and we're here to help, my friends. Okay, all the very best. Stay safe. We'll see you tomorrow. We're doing another webinar with the PTT tomorrow from 1:30 UT Universal Standard Time, GMT. So I will see you then for that. In the meantime, stay safe and see you all tomorrow. All right, everyone. Bye-bye.